Hey folks, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please leave a 5-star rating and review. Folks, there's not too much to talk about as it relates to the price. We're still seeing a lot of volatility and chop, but the macro structure is still intact as we've been discussing in the past podcasts. I've been outlining in my newsletter as well. So we got to give the market more time here to see the decisive move here. As I've been saying, there is a bearish scenario. There is a probability of that scenario playing out, but I believe the higher probability is that we are still in a bull market based on macro factors. Right now, the Bitcoin fear and greed index is in extreme fear. So let's see what the market does later this week, even into next week, as we've seen when the sentiment gets this bad. And the herd is all feeling depressed and sad and fearful and so forth. That's when the whales do the opposite. So it's a patience game here. Now, something that's interesting, we're starting to see the Fed inject liquidity doing pseudo or stealth QE, if you want to call it that, not full on QE. And this is via the reverse repo market. They apparently injected another $24 billion, and over the past 5 days, it's totaling $125 billion. So could this liquidity make its way back to the markets? I think so. We saw this in 2023 with the regional banking situation and how they did all of that, and even liquidity injections along the way from the Treasury and much more. So clearly, they are trying to prevent some sort of collapse here, and it's what they've been doing for a long time. So this is why the foundational thesis to why we're investing in assets is that these central banks, including the Fed, will continue to print and debase currency, and that's going to steal your purchasing power of your cash, your fiat. So that's why you have to take some of that fiat and put it into assets that will outpace that debasement and the inflation. So the same inflation that's driving up the price of services and goods is also driving up your asset prices. So this is the macro thesis, right? And once you understand this, you know where to position yourself and be patient because it's the long game that we're playing here. Now, there is some cyclicality to the markets, like the 4-year liquidity cycle, not the halving, but the liquidity cycle, which which I believe some of that is being delayed a bit because of the Trump tariffs. And I've been saying it's pushing the bull market into 2026. So this is a positive sign, not that I'm for this or I'm endorsing this, but rather we know the liquidity will make its way through to assets and they will continue to go higher. Now, we continue to see digital asset treasury companies buy. So they're buying the dips. Tom Lee's Bitmine Immersion acquires an additional $300 million in Ether, bringing holdings to $13.7 billion. That's incredible. Michael Saylor's Strategy also bought some Bitcoin. They bought 397 Bitcoin at an approximate price of $114,771 per Bitcoin. So this is very telling as well that these guys are buying in this uncertainty where some people are saying the top is in, right? So very interesting here. And Tom Lee specifically, he was on CNBC I think it was today, yeah, and he was saying that he expects the bull market to continue and we end the year strong, a big rally. And he said, some of the things I've been talking about on the podcast, and that is government shutdown and these things resolving, the Fed continuing to cut rates, and signals of QE. Not necessarily that they're going to hit the printer and start going full on QE, but the markets just need the signal, right? And I think he's right. Now, he could be wrong. We don't blindly follow people. I don't want you to blindly follow me. I always tell you guys, do your own research and also get different point of views, right? Never follow anybody like a cult because we're all human beings. We can get things wrong, but we want to make sure we're focusing on the data and the facts, not made up fairy tales, not our emotions, because that will wreck you in the markets, right? So very interesting that these folks are buying. All right, we got some very big news out of Ripple today. Lots of big news. So first up, Ripple Prime breaks ground in the US today with the launch of digital asset spot prime brokerage capabilities, allowing clients to execute OTC spot transactions across the most prominent digital assets and stablecoins, including XRP and RLUSD. So there was also announcement that Ripple's RLUSD has officially crossed over a $1 billion market cap. So that's pretty great growth there. And they said with Ripple Prime, G Treasury, and Rail now joining the effort, RLUSD and XRP will drive faster, efficient, and compliant settlement worldwide. This is how we advance the future of finance. So big news for Ripple's stablecoin and even the adoption of XRP. Ripple also made a new acquisition. So they said here, institutional grade asset custody just got supercharged. We're acquiring Palisade Incorporated. And on Palisade's profile, it says a digital asset custody infrastructure company. Palisade offers a fast and scalable wallet solution ideal for on and off ramps and global corporate payments. This integration accelerates value transfer across Ripple payments and Ripple custody. Secure custody enables the on-chain economy from safe storage to seamless transfer. We're building the internet of value. Big news here. Ripple continues to make huge acquisitions, building out their network and being able to service different financial institutions across the globe. And of course, they're pushing their stablecoin, RLUSD, which is built on the XRP ledger and Ethereum. And of course, the use of XRP and the XRP ledger where possible. So very big news here. Now, folks, a great place where you can buy, sell, stake your crypto assets is on Uphold. So I've been a user of this platform since 2018. They're one of my go-to exchanges. I've never had any issues or problems with them. They've always been reliable, and they offer staking on 20 plus crypto assets, and they also offer 300 plus crypto assets. So you can get access to all of the top coins. And best of all, folks, they are fully reserved. They don't commingle or lend out your crypto assets, and you can review their transparency report on their website. In addition, they offer a rewards program where you can earn up to 5.25% on stablecoins, and you can also get 24-hour early access to new tokens that they list. So the stablecoins they support includes Ripple's RLUSD, where you earn up to 5% there, USBC, where you earn up to 5.25% there, and USDC, which is issued by Circle, you earn up to 2% there. And to participate, you simply have to log into the app once per month, deposit $50 once per month, and trade $50 once per month. So pretty straightforward. So once again, Uphold is a great platform. I've used them for many years, and they got a lot of different products and features. So check them out. The link will be in the description. Now, folks, huge Chainlink news. Many of you know I hold Link in my portfolio. I'm very bullish on this project. I've often stated we see Chainlink is getting adoption from TradFi, blockchain projects, and crypto native companies. So their products and solutions are amazing, guys. It's solving a real problem, and it's enabling a lot of cool features in the crypto industry with their price oracles and so forth. And actually, guys, tomorrow and Wednesday, I will be at Chainlink SmartCon doing interviews. So I'll be interviewing some really great guests. So stay tuned for those interviews. So the FTSE Russell taps Chainlink to bring Russell 1000 and other index data on chain. What a headline. That is pretty incredible, guys. So leading crypto oracle provider Chainlink has inked a partnership with FTSE Russell to bring its indices and market data on chain. This includes data from major global indices like the Russell 1000, Russell 2000, Russell 3000, and other FTSE products. FTSE Russell will onboard its data using Chainlink's institutional grade data publishing service DataLink. The data will now be accessible 24/7 across multiple blockchains, according to an announcement on Monday. So you see how TradFi is using this technology to become 24/7. So it's what we've been talking about for a long time. The token economy, crypto's been running 24/7, 365, no holidays, no opening and closing bells for years. Now, the TradFi markets, stock market, and much more are trying to do that, right? So DataLink, previously tapped by major data purveyors like Deutsche Börse and S&P Global, is used by thousands of decentralized apps and integrated with dozens of blockchains. Data providers integrate with DataLink, which then pushes data to Chainlink's nodes, making it accessible to smart contracts. This is really great, guys. And it's just one of the reasons I am bullish on Chainlink, guys. I just been studying this project and looking at all the different aspects, and it is getting real world adoption. So here's another example. Brazil, Hong Kong tests cross-border blockchain trade system via Chainlink. Wow. You got banks leveraging Chainlink here. So, Brazilian digital bank Banco Inter has completed a blockchain based international trade finance pilot with Chainlink, the Central Bank of Brazil, and the Hong Kong Monetary Authority, showcasing how distributed ledger technology can simplify cross border settlement. The experiment took place under phase 2 of Brazil's Drex central bank digital currency project and simulated the settlement of export transactions between Brazil's Drex network and Hong Kong's Ensemble platform, a blockchain system developed under the HKMA's Project Ensemble initiative. Chainlink provided the interoperability infrastructure connecting the two networks, according to Banco Inter. Banco Inter has previously worked with Chainlink, including in an earlier phase 2 pilot of Brazil's Drex digital currency project. Incredible adoption, and we're just seeing banks and the other major institutions leveraging blockchain technologies in different ways. So, very bullish. Now, look at this news related to the Canton Network. And remember, I've been talking about that. This is a coin I want to invest in. It's not on the major exchanges yet. So once it's available, I'll let you guys know if I take a position. I don't want to buy into a pump. So I've often stated I wait till there's blood on the streets and then I buy. But this project, I interviewed the folks who are building it, Yuval Ruse of the company called Digital Asset. And many banks are backing this blockchain because it's a public blockchain with privacy built in. But look at this. Theramune, if I'm saying that right, raises $540 million with ARK Invest, as Kathy Wood, DRW, Kraken, the exchange, and others to build Canton Coin Treasury. Big names backing this to build a digital asset treasury company for the Canton coin. And this coin is not even in the open market yet. So NASDAQ listed Theramune Incorporated said Monday it raised about $540 million in a private placement to fund a new digital asset treasury strategy centered on the Canton coin. The token powers the Canton Network, a blockchain built to link regulated institutions through a privacy-enabled system supporting atomic settlement across multiple asset classes. The deal, priced at $3 and just about over 7 cents per share, is expected to close around November 6th. Investors include DRW, Liberty City Ventures, ARK Invest, Broadridge, Kraken, and Polychain Capital, among others. Last week, Bloomberg reported that trading firm DRW Holdings and Liberty City Ventures would contribute a portion of the Treasury's funds directly in the form of Canton coins, which are not yet listed on crypto exchanges. So again, do your own research, right? Don't just follow me blindly. Like I said, guys, I'm just being realistic with you all, but this is a project I am watching very closely. And after my interview with Yuval Ruse, I realized what the hell is happening. The folks who are involved, Goldman Sachs, and a bunch of other banks involved with this project. So this is a coin I'm going to be looking to buy the dip on, not buy the pump, right? I hope you're learning my approach here and how you got to approach it. You don't go with the herd buying the pump. You go when people are scared, like right now. That's the time to be buying. Now, obviously, there are nuances to that. Are we in a bear market in a massive downtrend, right? Like it would be like buying in 2022 when the price is about to collapse further. So are there some nuances there with the timeline? But nevertheless, it's always, I think, a good time to buy when there's blood on the streets. It's like Warren Buffett said, be greedy when others are fearful and fearful when others are greedy. So big news here for the Canton Network. Now, speaking of tokenization, tokenized treasuries cross $8.6 billion as banks and exchanges push collateral use. So we are seeing the tokenization race and utility heat up here. So tokenized US Treasuries, the largest class of real-world assets after stablecoins, have entered a new phase. Tokenized money market funds, which pool cash into short-term US government securities, are shifting from a passive yield to collateral for trading, credit, and repo transactions. As of late October, the total market cap of tokenized treasuries reached $8.6 billion, up from $7.4 billion in mid-September. That's a big jump, just in a month. The increase was led by, guess who? BlackRock's BUIDL, of course, which reached about $2.85 billion, followed by Circle's USYC at $866 million, and Franklin Templeton's Benji at 865 or 865 million. Fidelity's newly launched tokenized MMF also showed impressive growth and rose to $232 million. Look at the names there. With the exception of Circle, the others are all Wall Street giants who were around before crypto. And look at what they're doing, folks. This is why I'm bullish. Again, you're just seeing investments building, continuing, because these guys don't think the crypto market's dead and oh my God, it's over and all that, right? They're building, they're preparing, they have the macro view, and that's what I'm trying to impart to you, to have the macro view. Don't panic, don't worry. Oh my God, it's over, right? It's not over. As long as they keep printing money and debasing the currency, and we know they have to because it's the fiat system, crypto will continue to run. Will there be slight differences in each cycle? Of course. An example I gave yesterday was look at what happened in 2020 and 2021, the double peak, right? Versus 2017, and even 2013 and 2014. There have been different movements in the markets, but they still ran to new highs, right? And we got to be patient. There are some headwinds in this cycle, like tariffs, that were not present in the previous cycles, so that it kind of threw the curveball to all markets. Like we had the big dump and collapse earlier this year, right, with Trump's announcement of the tariffs. Plus, it continues to be a headwind where, in early October, we know what happened. Trump tweets out and boom, the market dumps. Some insider whale did some manipulation with shorting and much more, but I digress. I hope you guys just see the macro view and the fundamentals that are still intact here. Now, something you should know about, some people have been spreading a lot of rumors. These bears are going crazy. I'm seeing top accounts on X, people who I know they're shorting, but they're just putting out the most BS, FUD, fearful charts and information. And here there's a rumor going around that Wintermute, the market maker, is going to sue Binance, saying but the CEO came out and said it's false information, it's baseless. If you don't know, Wintermute, they're the market maker where Binance sends like coins to sell or even to buy, right? Vice versa. And a lot of people complain about the market makers, but that's how markets work. I think a lot of crypto people don't realize market makers are just doing their job. If you want to be mad at somebody, be mad at Binance or be mad at the people who want to sell. The market maker is just doing their job. If you want to buy, the market maker will provide the liquidity and all that. You want to sell, the same thing. But like I said, there's a lot of FUD going around that Wintermute's going to sue Binance. So you're going to see some crazy rumors and stuff. The bears are going nuts, man. I can see them because I've been here in the market. I know the game now. And certain accounts, I've been tweeting back at them like, hey, man up and show us your short positions, right? If you're going to say all this BS nonsense. And again, that doesn't mean that I'm not denying that there's going to be some downside, but they're trying to say, oh, it's 1929. Look, it's over. It's going to crash. And a lot of people are falling for it, right? Who don't know better. But look, it's the game. But hey, I don't use leverage. I bought the bear market bottom spot and I've been holding, and my portfolio is up despite what's happening right now of when I entered the market. And I've been telling you guys, buy the blood in the streets and you'll be fine. It gives you a better opportunity to make more money and even withstand some of the volatility on the way up to new highs. So guys, that's the news. Let me know what you think. Leave your thoughts and comments below. Hit the thumbs up button. If you appreciate this content, please support the podcast by subscribing to my free email newsletter. It is 100% free on Substack. Check out my book on Amazon and my course at mycryptocourse.com. This is a comprehensive course that teaches you everything you need to know about crypto. Folks, thank you so much for tuning in. I appreciate you all, and I'll talk to you all later.